In today's episode, we're talking Gilead Sciences. We're going to start off with their business model, their dividends, and what my holdings look like, financials, and then finally talking about their COVID-19 response, what they're doing to fight the coronavirus, and how it will impact their stock outlook. So, hope you guys are interested and looking forward to the discussion today. Feel free to hit the subscribe button, hit the like button, tell your friends, and let's get started. What is Gilead Sciences? So, we can start here with Wikipedia and get a quick overview. They are an American biopharmaceutical company. They specialize in antiviral drugs, although they have made several acquisitions over the years and focus in other areas, but primarily are known for antiviral drugs. They are a relatively new pharmaceutical company. So you can see here they started in 1987. And in today's episode, we're going to talk about not only what medicines they currently have, their pipeline, but more importantly, how it affects my portfolio and whether or not it's a solid company for you to invest in if you're looking at a dividend growth strategy. All right, so let's start with their medicines and what is currently their source of revenue, and also what's in their pipeline. So if you look on their site, you can actually see the major areas of disease that they cover. So primarily HIV, liver diseases, hematology, oncology, cardiovascular, inflammation, and respiratory, and then others. But if you look, their first category of antivirals fighting HIV and AIDS, it is the majority of their current set of medicines, and also why I chose to invest in Gilead, because they really have almost a monopoly on solid antivirals to treat HIV. And so with that, they also cover liver disease, right? So similar kind of mechanisms and science behind that, but they have some bigger medicines covering liver disease as well. You've probably seen some of these on television if you live in the United States. Epclusa, Harvoni, I definitely remember those names from some of the commercials that you see now for pharmaceutical ads. So Gilead really is more specialized than some of the bigger pharmaceutical companies out there, but have a very solid portfolio and a dominance in one particular area of antivirals. So let's look at their pipeline next. So the way that most pharmaceuticals work is that they have some active medications and things that treat diseases, but they're always developing additional pipeline drugs, what they're called. So things in the pipeline can be in various clinical states, and you can see here, they have 48 pipeline drugs in clinical stage programs. So, and then 16 in P3 and P2 trials, 16 that are in licensing options or product acquisitions, and then 4 breakthrough therapy designations. So this is the majority of their pipeline. This can vary as well as to what phase in the pipeline they are or what phase of clinical trials they're in. But basically, pharmaceuticals have typically a lot of either cash to fund their research and development or debt to fund their research and development. And you'll also see a lot of acquisitions in this industry. So let's jump down to their pipeline. A lot of you probably know of this drug due to COVID-19 and its popularity in the past few weeks and what Gilead is doing to market it. So Remdesivir is the name of this drug. You can see it's in phase 3, so fairly far along in clinical trials. You can also see they continue to work on their HIV pipeline, having several drugs in phase 2 and phase 3, and also in phase 1. Gilead has a pretty extensive pipeline. It's something you want to see in most pharmaceutical companies. You don't want them to just only have blockbuster drugs that are currently in the market, but also solid things in their pipeline, because at least in the United States, patents only exist for 10 years before drugs go generic. And once that happens, you essentially lose all of your revenue. Other companies can develop the drug, and you no longer have a patent on that specific drug. And what you need to do is supplement that with newer drugs, right? So things that are in the pipeline and potentially treating other diseases or similar diseases in a better way. So this really gets to their business model and what Gilead does in the pharmaceutical industry in general. So while we've covered that, let's jump next into the dividend situation for Gilead, how long they've been giving out dividends, and where it fits into my portfolio. So if we look at the dividend summary on Seeking Alpha for Gilead, you can see their current yield is around 3.56%. So not bad. It's a pretty decent dividend score, right? It's similar to what kind of long-standing companies are, right around the average, I would say, for my portfolio. You can see their payout ratio is actually really good at 41.88%. So they're not spending all of their money on their dividend, which is good. And their growth is 4 years, which might seem really short, right? Most of my companies typically have a longer dividend growth period, but Gilead is a relatively young company and hasn't been paying out their dividend for very long. So overall, I think that's a solid growth rate of 4 years. You can go here and actually go into the tab and see, okay, over the course of a year, they've grown 10%. Over the course of 3 years, they've been at 11%, and their years of growth is 4 years, so not bad. And then their dividend history, you can see if we click all, it essentially goes back to 2015, so really only 5 years here. And you can see they've been growing every year, and you can see the dividend declarations over those 5 years. So overall, I would say this is a new dividend payer, right, in the relative term of time here, and has had solid growth. Basically, since they've started paying out their dividends, they've had growth, which is a good sign. And I think it is something that will continue to grow. And considering their revenues and the drugs that they have in the market, and their monopoly and their business model, that's why I choose to have them in my portfolio, because I think their dividends will only grow from their existing point. So let's jump into my portfolio just to see how much Gilead stock I have and what it's been looking like for paying out dividends. So if we look at my overall holdings, you can see Gilead actually sits right in the middle of the pack here for me. So I have about $376 worth at a cost basis of $329, and you can see pretty good growth considering most of the market is down in this period of time, 14% growth. So let's click on that, and you can see their performance in the day view, 5-day view, etc. Again, the yield is a little different here, but pretty close to what we saw on Seeking Alpha. Overall, I would say, it's sitting in the middle of the pack for me. I think long term, I will probably actually invest heavy in Gilead. I might want to up the percentage in both of the slices here. Overall, I think it's a solid company with a lot of growth potential, and I think it's something that you should strongly consider if you are thinking about adding pharmaceuticals to your dividend portfolio. You can see some of the other pharmaceuticals I have are AbbVie, so I actually own more AbbVie. I think AbbVie's been one of the dividend aristocrats. They pay out and grow their dividend pretty much every year consistently for a number of years, and so AbbVie is another solid choice. But other than AbbVie, I would say one of your best bets is probably Gilead Sciences. So definitely do your research and look into them and see if it makes sense for you. But we'll talk about some of their upcoming drugs and the current status of things with COVID-19. But first, let's talk through their financials. So this is from their 2019 financial statements, their annual report. This chart actually does a very good job of highlighting their financials. It's actually really the only financials that they discuss in their 2019 annual report, which is a little strange to me, but overall you get a good sense of what they're doing. So they have $22.4 billion in revenue. So this is mostly from pharmaceutical sales, and then that is equating to $9.1 billion in cash flow. If you notice, they are offsetting all of their cash flow from operations with research and development expenses, right? That's why they have such a decent pipeline, because they are spending the money to make sure that they have drugs in the pipeline, and are really basically taking all of their cash and putting it towards research and development, or at least their cash flow for the year. This cash dividends payment, you can see they pay out about $3.2 billion. So relative to the revenues, it's at a pretty good ratio. And then share repurchases, I don't love seeing this $1.7 billion number. I think that it makes sense for them knowing what they have coming up, and what they had in the pipeline in 2019. But, I don't love seeing this large chunk of share repurchases. I'd rather see this in cash dividends. I'm more concerned with dividend growth, obviously, rather than stock price. But they've also been paying down their debt significantly. So they have paid out 2.8 billion in debt last year in 2019, which is a good sign, meaning they think they have enough cash, obviously, to be paying down debt. And then finally, this is their overall cash and cash equivalents that they have currently, right? So this is cash made from previous years, not including all of the expenses that they paid out in 2019. So 25.8 billion in cash is not bad. So let's look at the Seeking Alpha view of their financials. So first, let's look at their balance sheet. You can again see their cash. Let's look at the December 2019, so 24.7 billion, let's say. So pretty close to what we saw in that last statement. And then let's jump down to their assets. So overall, they have about 30 billion in assets. Some of that's in inventory, some of that's in prepaid expenses, but overall, a lot of that is in cash, right? So that's a good thing to have. They do have quite a bit in long-term assets as well, right? So they have plants and equipment to produce those pharmaceuticals. They also have long-term investments. What you'll see in a lot of pharmaceutical companies is goodwill and other intangibles. So goodwill is typically through acquisition. So when they're acquiring other companies, this goodwill is like not a real thing necessarily, but it's valued at 4.1 billion, right? And this is intellectual property from other companies that they've acquired, or things that they find to be assets from those other companies. And then other intangibles, typically for pharmaceutical companies, means patents. So the patents on their drugs are worth quite a bit, right? We're looking at 13.8 billion in patents. Overall, if you add these things up, they're at 61 billion in assets. So then let's look at their liabilities. Mostly I focus on this long-term debt. So this is money they've taken out and need to pay down over a long period of time. So this is 22 billion. You can see their total liabilities is around 39 billion compared to their assets of 61. And also this 39 billion is not that much more than their 24 million they have in cash. So they're looking in a pretty decent shape from a cash flow perspective. Not amazing, but not bad for a pharmaceutical company. And then the remaining is their equity, obviously, to make this all balance out. So let's also jump over to their cash flow statement really quickly so you guys can see what's going on there. And in 2019, again, their net income. So after kind of all their expenses, you can see this revenue of 5.386 billion. Not bad. Again, cash flow from operations is that 9 billion that we talked about earlier. And overall, you can see that total debt repaid, again, that's 2.75 billion. So pretty good cash flow picture in general. Obviously, the cash flow is negative. They are investing heavily in research and development to the tune of 9 billion that we talked about earlier, but they had a big cash flow from the previous year, and they're sitting on cash overall. So not horrible to see negative cash flow for a pharmaceutical company. So lastly, we're going to jump into the COVID-19 situation and the drug they have in Remdesivir, and what that potentially means for their stock and their future. So we're going to look at two articles from Seeking Alpha first. This one speaks about Gilead's Remdesivir is already sold out. That's a very interesting thing considering it's not even on the market at this point. So it asks the very important question of who bought all the Remdesivir. Mostly that is the U.S. government, right? So once they figured out that this is pretty successful in fighting COVID-19, the U.S. government has purchased all of Remdesivir, or actually I should say 90% of it, as this article spells out, to the tunes of about 1.6 billion. So obviously, like they said, not a bad chunk of revenue for Gilead. This is before their July 30th Q2 earnings call. So we'll see overall what their sales looks like in Q2. But, this article states that this could be anywhere from a $5 billion to $10 billion drug, even annually, right? So this is something that is huge. Additionally, They are looking at alternative formats for delivery, so not just injection, but also inhalation, meaning you could put this in an inhaler and potentially treat others who couldn't use the injection format. So there's a lot of upside to Remdesivir. It seems to be pretty successful in fighting COVID-19. The U.S. government has backed it by getting it through trials very quickly and hopefully getting it into the marketplace in 2021 as quickly as possible. The other article we'll quickly touch on here is that Remdesivir was also okayed in Europe for COVID-19. So we're not only limited to a US market, but also the European market, which is another big win for Gilead. So what I suspect will happen with Gilead is once the Q2 earnings statements come out and the earnings calls happen, we'll see a big boost in their stock price. But overall on this channel, right, we're focused on dividend growth. So hopefully you guys have gotten a better picture of their business model and their financials and their fundamentals, their cash flow, right? These are things that I want you to remember to analyze when you're looking at any stock, but in particular for pharmaceuticals, you want to look at their cash flow, their pipeline. Is it a big pipeline where they have lots of things coming down the pike? Because remember, a lot of those drugs will not work out. They'll get to trial. They'll either not do what the scientists thought they would do, they won't be very effective, or they'll have side effects that just don't allow it to go out to the broader market. So overall, you'll want to look at their pipeline. You'll definitely want to look at their cash flow and their fundamentals. Do they have a lot of long-term debt on the books? And then just overall, what is the marketplace looking for, right? Are they in disease areas that make sense and that are growing? And overall, are their financials in a state where they can continue to pay their dividend? Is their dividend safe? And more importantly, can they continue to grow it? So hopefully all this information was helpful for you. Again, if you like the content, give me a thumbs up. Feel free to leave a comment on other pharmaceuticals that you guys are interested in or that you might want me to cover. And I will see you again next week.